Based on the equations in the question, I can tell this question is about the statement of financial position, sometimes called the balance sheet. Let's create a simple statement of financial position that will guide us through this question. On the left-hand side of the statement, we record assets, which can be broken down into current assets and fixed assets. Current assets are cash or likely to be converted to cash within 1 year, whereas fixed assets generally last many years, such as equipment. On the right-hand side of the statement, we record liabilities, which can also be broken down into current and long-term liabilities, and equity. Now, a basic principle behind this statement is that assets minus liabilities equals the company's equity. This means if a company has $3 in assets and $2 in liabilities, its equity is $1. As a side note, you may have noticed that the right side of the statement, liabilities plus equity, equals the left side, assets. This is where the name balance sheet comes from. You with me so far? We can test each equation by plugging in these easy to work with numbers and simply asking ourselves if it's mathematically correct. Does assets of $3 minus liabilities of $2 equal equity of $1? It sure does, so we can put a check mark beside equation number 1. Does equity of $1 minus liabilities of $2 equal assets of $3? Of course not, so we can cross out equation number 2. Does liabilities of $2 plus equity of $1 equal assets of $3? Yep, so we can put a check mark beside equation number 3. Finally, this allows us to confidently select the answer that says equations 1 and 3 are correct. This is why you practice. It gives you the opportunity to have those light bulb moments where you learn something new and develop strategies for answering questions that may seem confusing at first, but aren't really that bad once you know how to tackle them.